Have you noticed the recent upward trend in the stock market? The S&P 500 and Nasdaq Composite are both riding the surge in chipmakers shares, with the information technology sector leading the gains. It's quite the boost to start the year, and what's more, we're seeing a rise in the 10-year Treasury yield. Now let's touch on the market sentiment. It's been positively influenced by reports of a narrower tariff plan by the incoming administration. President-elect Donald Trump seems to be playing a key role in this optimism. With his narrower tariff plan, we're seeing a more confident market, a market that's willing to bet on a prosperous future. And while we're on the subject of betting, let's not forget the role of the chip makers. Their shares are surging, and this is propelling the S&P 500 and Nasdaq Composite to new heights. It's a display of strength from the tech sector, a sector that continues to shape our economy and our lives. It seems the stock market is starting the year with a bang, but what could be driving this? Let's dive into the factors contributing to these market trends. Analysts are looking ahead at 2025 with a positive lens, predicting a 10% increase in the stock market. This optimism is fueled by a strong economy that is showing resilience and growth. Beyond the numbers, investor confidence is being boosted by favorable policies from the White House, creating a climate ripe for investments. But it's not all smooth sailing. There are whispers of concern about the Federal Reserve's interest rate projections. The question on everyone's mind is, how will these rates affect the market's performance? The scenario is reminiscent of a tightrope walker where the right balance can lead to a successful performance, while a misstep could lead to a potential fall. In this dynamic landscape, it's essential to remember that the market is influenced by a multitude of factors, from political policies and economic indicators to investor sentiment and global events. Each plays a role in shaping the trends we see. It's clear that there are numerous factors at play in the current stock market trends. Now let's take a closer look at some sector-specific trends and projections. The information technology sector is leading the charge in the S&P 500, with companies like NVIDIA and Apple making significant contributions to market gains. This surge has been driven in part by the growing influence of artificial intelligence in the economy. Meanwhile, oil and gas exploration stocks are experiencing their longest rally in almost 5 years, reflecting a resurgence in the energy sector. This has been fueled by a combination of geopolitical changes and technological advancements in exploration and extraction methods. In the realm of digital assets, new exchange-traded funds with Bitcoin exposure are set to launch. These innovative investment tools offer investors a novel way to gain exposure to the burgeoning world of cryptocurrencies. On the aviation front, American Airlines shares have taken flight following a price target hike. This uptick reflects growing optimism about the recovery of the aviation industry as travel restrictions continue to ease. With such diverse trends across different sectors, it's an exciting time to be involved in the stock market. So, what have we learned today? We've seen the S&P 500 and Nasdaq Composite post back-to-back gains propelled by a surge in chip makers like NVIDIA. Factors such as a narrower tariff plan and the Federal Reserve's interest rate projections have influenced these trends. The information technology sector is leading the gains with new ETFs launching and American Airlines shares rising. Stay tuned for more updates as we continue to monitor these exciting stock market trends.